Okay. So last week we were discussing about a few of the item in terms of investing. I would like to reopen that here. So last week we
Yeah,
were, and okay, so maybe today's agenda, which we already discussed, we will come back to that. I already have list of something to discuss, but we would like to take some minute to go through what we were discussing last week. So we were discussing
yeah,
last week that we have already reached to a point in terms of market, Indian market, where uh, it may be a possibility that the top has been made for some time and it will come down. And since last week when we had this discussed, I think from that moment it is falling down considerably high. And if I say about small cap or mid cap, it is actually getting more deeper. It is not a normal sign of correction. It more look like people are selling and running. So there are many fundamentals and technical things that we can see on the chart. But our intent, as we discussed last week, is that it will fall down. That's fine. But there will be a moment when it will be again at a comfortable level for where an investor is always looking for. Now it is not a comfortable level. It is still very high. And we were saying that this bear phase may last for 6 months to 3 years. And in between, we have to make our position ready for the next bull run. And that's what I was talking about last week, that we have to find the reversal investing. So when it is going down, it is making accumulation of a particular price and then it plans to go up. We have seen some of the chart last time. Today also we're going to look for some of the opportunities which I have already identified. But our plan was, a larger plan was, we have 1 to 3 years time and we need to come up with 30 stocks which we believe can be multi-bagger in next bull run. To do so, we need to go through some stocks and we were trying to identify how can we do it. But we also identified last week that picking stock, investing in stock is one part, but the greater game is allocation. And this bull run, we miss the allocation part. We are not able to allocate our money in good amount. So there were stocks which were going high, which become 2x, 3x, but we invested 10K. And where we invested 50K, assuming it will go high, it goes 30% up. So there is something fundamentally wrong. And this time we wanted to discuss more about the allocation. So today's meeting, we will going to discuss more about allocation and some of the stocks which I have figured it out, which we can discuss. I also will going to share my screen in trading view and screener. And I also found one more app or a website where the co-pilot is embedded. So it is pretty useful. So I'm also going to show you that. It's pretty entertaining also to chat in the co-pilot and then get the result out of it pretty easily. So it saves a lot of time. I will also
okay.
show that. Okay. Um, First, I would like to go to trading view. We can go to the allocation later. Okay. I have, I think last week we have not gone deep dive into the page, but this is an important layout which I have designed for myself, and it is tough to understand at first, but I can just explain on a very high level, and this can be used in future. Okay, this is something completely new and complex, so I will take some time to explain what does it look like. This is price. This is also price. Okay. This is a line chart and you have EMA, moving averages in part of it. Now, this is 200, 100, 50, 20. Yeah, all standard. This is daily chart. This is weekly chart. Now, we have to see the time frame charts together because for a long-term investor or anyone who wanted to really see what is happening in a market, you need to see it from a distance, and any chart which is less than 1 day doesn't show us a real picture. So when we see from far distance, we can say that okay, this stock has been moving up for a certain moment, and yeah, it is now falling down from its top. It has been falling down considerably well, like 20-25%. And on a daily chart, it looked like it is going down and down and down. Yeah. So it just for a view perspective, when I analyze a stock, I do have these two layout together. Then I have volume on each of the chart, because volume is a good indication to say when is a panic on the market, or when there are more strong hands coming in, like FI or DI are putting their money in, like they did in 2020. Yeah. But the volume doesn't really specify anything other than that. I have comparative RS. Comparative RS is something which is important for me to know. It says the stock we are talking about, is the stock is stronger than Nifty or weaker than Nifty. So if this orange line is going up, it means that the Nifty is not so strong. The green line is Nifty, but the stock is going high, which means that the stock is stronger. And that's the baseline. If a stock which is performing well is stronger than Nifty, it means that it has the strength. And you can see that in past, I think 2021, it is always around Nifty. So this is a good indicator to say when a particular stock is doing good and when it's doing bad. Okay, so for me it's important, I put it. And then I put RSI. I will not go into RSI. I think it is a well-known concept. Like when it goes down, it is considered cheap. When it is up, it is considered over expensive. On the day, I have put few more things like EPS. EPS is earning per share, and this is important, huh? Why? Because if a company is making profit, then the profit will be visible on the share price. So each share price will have its increase in EPS or decrease in EPS, depends on the performance. It is not the sole indicator to check, but if EPS is decreasing, then it is not a good company, because it means that earning on the per share is actually not going up. So there's something wrong. Okay, so that's one of the critical indicator. For example, I would like to open a company called Z Business. Sorry, Z Entertainment. You can see here that this yellow chart is keep decreasing, right? I can enlarge it if needed. But you can see here that there's a moment when it try to goes up. I can also make it bigger enough. Yeah. So it says in a particular time frame, the earning goes up and then it goes down and then it is going even negative and then again it is trying to go up. So if I have to summarize the fundamental word which people use it, is that whenever the earning goes up, usually the stock goes up, and whenever the earning goes down or decrease, usually the stock goes down. So from a technical perspective, this is a pretty easy way to identify that the earning indicator is helpful. Then PE, and we know about PE, right? So I also add PE here, and PE is, by the way, a part of EPS anyway. So to calculate PE, we actually use EPS and ROE. And ROE is something, return of investment, which I have added, and I have a feeling that this is going to help us. If a company is doing good, then the ROE should increase, like Nvidia. So, oops, Nvidia. So, if you see Nvidia from 2023, the revenue is increasing, which means the ROE, return of investment, is increasing. And the same moment, the EPS is also increasing, and hence the stock price is also increasing. So, when we are talking about that we wanted to find the stock which will be the next bull run player, that moment we need to find some place where there will be a change on the EPS and ROE like this. Why this is important? Nowadays you might have heard that company results are not coming good, which means that the stocks are falling because the result is really bad. And that is the truth, huh? Results are coming bad. So there will be a moment in next 1 to 2 years when the results will keep coming bad. So this chart will be like going down, down, down. And then there will be a moment when this will get saturated and then the earning will start. I would like to explain with an example. you open a restaurant and you started selling the items for 10,000 a day, assuming 1 lakh rupee a month. Now you are continuing 1 lakh for another 1 or 2 year, but the growth will not come. But after 2 year, the growth will come, either because you increase the prices of the menu, or either you open a new hotel, or either you have saved the money and you have increased some of the things which help you increase your business. So you increase your 1 lakh income to 2 lakh, but again after 2 months you can't go to 4 lakh. After 2 lakh you have to stick to the 2 lakh, and you have to again go through a phase when you will increase your capacity, increase your items, increase your customer base, and then it will again go up. So every business which we talk about do the same. There's a moment when the EPS and ROE usually goes up, then it got stagnant or it decreases, and then after certain moment it again goes up. And any good business will do the same. Okay. So even if you say HDFC, and this is important because this gave us a good filter. See this HDFC Bank. Although HDFC is not a good example at the moment because the earning never goes bad. Um, let's take some other example. Let's take uh, some
This
bank.
one, APIT.
APIT. Oh,
Yeah.
okay. Good example. So at least in trading view, we don't have enough information at the part of EPS, but you can see here that the ROE is keep increasing. So if you see the ROE, it's keep going up. So return or investment equity is going up. And I would say this is the candle, or this is the line where we should be more interested in, because it was kind of stuck at a moment. Then there's growth come. Yeah. Whichever factor is responsible, we don't care about.
Mm.
But this is an important thing to say, that even if you see the chart, you may feel like, why we should ever buy anything at this price? What is there? And say, okay, the ROE is increasing. It's a good thing. Although I don't have EPS at the moment to verify, but this is good itself to say that, okay, even if you buy something here, it's not a bad decision. And if the next year, or sorry, the next quarter result is more than the previous ROE, and the same for EPS, then market will obey. Now technical goes before fundamental, which mean that if market knows that the results are going to come better, like EPS will be better, ROE will be better, then stock will travel first. Stock will always be ahead of its fundamental results. So you cannot say that the results are coming good, why it is going down, because whatever result is going to come, market already anticipated that, and it was already get a value in and around that value, and then it stop coming. Okay. So this is one of the good indicators. I would like to open one more example. Tell me any example. Maybe um,
Gold we need.
what?
Federal Bank. Federal
Federal
Bank.
Bank. Okay. So this example of the Federal Bank, I would like to first open the EPS. So, okay. So from 2020, at least we can see from April that there was a moment where the EPS was kind of stuck, but there's a moment in July 2022 when, or in and around when the EPS is starting to going up, which mean that the company was doing something good around that time. And you can also see here that, okay, maybe I can make it this way again. Yeah. So 2022, somewhere here, right? See, this is the moment when actually when the market also started going up. You see that? So EPS is a good indicator. Yeah, I'm not saying it is the only indicator, but this is a very, very good indicator for me to verify fundamentally, because I usually just open charts. So in the charts there are limitations. Okay, but this is a good example. Huh? Let me note down Federal, because I would like to open and discuss Federal today, because I see something here and I will come back to it. Okay, great. So this is what I was thought to speak about, like what is my setup for analysis. It looks complex, but with effort and with practice, it is very convenient, because then you don't need to worry about a lot of things. It's good enough. Hey, I think we have. Hey, hello.
Hi, Jaraj.
Uh, hi,
Hi.
hi, man.
We have already started.
Sorry,
Oh,
you
there
already
is.
started, eh?
Yes, we have already
Okay,
started making
okay.
Yeah,
money.
we are about to sell now. We already brought, we are about to sell.
Yeah,
Okay.
yeah. But more than that, we were discussing about a few of the things. We'll continue. Yeah, maybe you can jump in whenever you have any more doubts. Yeah, it's a continuation of last
Okay,
week
okay.
actually.
Sure, sure.
Great. So
Okay, okay. No
So
problem.
we just said that this particular chart do have EPS and do have PE and it has ROE, and it do help us to identify what is the what is the growth is happening in a company, and if there is a change in the fundamentals, then that will be easily visible to us. So whenever there is a scope in a chart, and when we say that the chart is cheap or the prices are lucrative and we should buy it, that moment I must say that we can see this, and if the fundamentals also support in parallel, it is really really good. Okay, other than that, um, I was talking about allocation last week, right? And I would like to re-emphasis on that part. So we have discussing about the allocation that normally we are very bad with allocating our asset. There are a lot many algorithms in the market, like how should you do it. One of the thing that people do normally is age, right? So if you are 40-year-old, then they says that you put 60% in equity, you put 40% in debt or some other gold kind of asset. So that is one, that is age based. Then there are multiple group of people who used to say that we put some money in FT, some money in gold, some money in only mutual fund. We don't want a direct naked investment. There are some who would like to do crypto, and then some who would like to also do things like FNO. So there are multiple type of people who do the allocation of money, and I'm just talking about allocation of money, right? So today, if you are using Zerodha, you can say that you have stocks, you have mutual fund, yeah, you have taken some ETF, blah blah. But in the end, you have a console where you can see how much you have invested and how much return you are getting. I'm just talking about that number. That allocation is more important. So if we say that example, take example of 1 lakh. If I have 1 lakh rupee and we are saying that this bull run is over, or at least it will be sideways if it will not go down, then we have 1 lakh, okay, in total. And out of 1 lakh, we have, 1 second. Yeah, out of 1 lakh, we have option to do all kind of things. We can do trading, we can do investment, we can do FDs, but we have only 1 lakh. And we are saying that this 1 lakh is part of the whole investment. So we are saying that this 1 lakh is something that we're going to use it for the next bull run preparation. And we already discussed that we have 1 to 3 year time. As per me, um, it is easier said that doing, but we should invest more on small cap and mid cap and less on large cap, you know. But we have to also see that where the large cap, mid cap and small cap are as of today, which mean that at the moment small cap are really high on the top, mid caps are still overpriced, and large caps are fine. But the growth chance on large cap are less, mid cap is good, and small cap is high, but it also come with the risk. So I was thinking that if I have 1 lakh rupee, then better would be is that we shuffle it with time. You know, we do not stuck to an algorithm and say that we will only invest 60% here, 40% there. We'll stick to it, but with a number. So 30% here, and just I'm just saying my view, huh? I'm okay to update myself. 40% here. But this investment will not go today. This investment will go when we are going to get our 30 stocks identified. Right? So we discussed this last time. that we want to stuck with max 30, uh, less you decide. But the 1 lakh allocation, we wanted to go with 30 stocks and no FD or no mutual fund, because we are doing all the efforts so that we manage our risk. And to manage the risk, it is important that we have our position in equity directly. You cannot give it to a mutual fund which is large cap managed, and then let it decide, because in that case it's also one of the approach. But at least what we are talking about, this is not the approach. We are talking about that we will find a list of stocks which will be going to go up in the next bull rally. Okay. Out of 30%, if you have to split the stock number, then 30% of 30 would be 9. Yeah, I'm just saying example wise. Here also 9, and 40% would be 12. Or I didn't know. Oh, it's fine, right? Yeah. So I'm saying, and when I say small, it also include micro cap if there is something like that. Yeah. So normally we are saying that we are going to stick with the number of stocks here, which are 9, 9, and 12. Okay. Now, let me take example of the Federal Bank, which you have suggested, Naveen. Just example for viewing. Yeah. I will going to make this like this. Okay. And I was telling you that we are going to look for daily and weekly both charts. And in the weekly chart, I'm more interested. So I would like to do like this. Huh. See, the bull run has started somewhere in Corona time, and this has gone up from that moment. So there are few things, which are the key indicator of every bull run. First is the price will be very, very low, or it will be a devastating price, and people would be selling. That is like the complete darkness moment, like this. And there will be, and these people which you see green here, they were, this is not a guarantee that they are the intelligent investor, huh? There might be those guys who are in fear that it will go down, so they might be selling their asset who have bought here. So this is the moment when we can say that the huge volume at a weekly price will help us identify that okay, this might be one of the phase when the beer will stop its work. It normally happens this way. When everybody is bearish, that moment itself the bull is born. Okay. Also on weekly we have RSI, and I have seen in past that whenever the RSI is touching 30, 20, around that on a weekly chart, and if that chart has potential, if that company is fundamentally good, then from that moment the stock can go up. But this is not a uh, direct statement. It can be wrong, but I'm just saying that if there's a moment when the RSI is really, really low, which means it's very cheap, but there's also a moment when the price is very, very bad. This is one of the moment when somebody can start investing. Okay. And I would like to also open Paint, because it's important that I will say what I wanted to say. And I'm just telling normally, how a beer and so pen, assuming this is the axis. Okay. And the price is blue. So we are here, price start falling like this, like this, like this, like this, and this will go here like this, and then it started going up. Okay. So we have a moment when we can actually can start investing, and those moments are here, here, and I'm just telling this here, here. Yeah. So normally this is how people or any person who is smarter than us would have done it, because there's no one who can say which is the base, and he can also may not be the guy who can say that it will go up from this point, so I will only buy everything here. So it has to be distributed across a particular channel, so that the average is so good that it will help us, right? So if somebody would have invested from here, 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 even here, even here, it's fine. In the end the average would be somewhere here. And if I would say from this point, um, sorry, if I would say from this point, as of today, it is about 123%. So it's almost doubled, right? So this is one of the example where we can say that the stock has doubled. it's not a bad thing. So normally we say that whenever there is a bear run, this particular chart will have to go through this cycle, and we as an investor need to invest our money in this process. So first of all, it has to qualifies to the fundamental that we are going to talk in details maybe next time. Like why do we choose this federal bank? Because there will be a moment, when this will be keep going down. Maybe Naveen will come and will say, hey, why we are still buying it? It's keep going down, and there's a possibility that will happen, right? Like Yes Bank. So Yes Bank was actually having this period. So if we are doing the same logic here, then maybe we are going to be get doomed together, you know. But more than that, if the fundamentals and the technicals both supports, and if even if we are wrong, then we have to take an exit. So if I like to come back here, that whenever we identified a particular stock, we have to kind of split our investment in steps. Okay, and those steps, I think that on one stock, if I say one stock, then I would like to invest 5 times. Okay, but even in between, I'm okay to close my position if it happened, saying that it's become a Yes Bank kind of stock. So one here, two here, three here, four here, five here. No, we would say one, two, three, and then we will say technical. So technically, it says that something is going bad. I mean, there's a technical way to identify that whenever this kind of pattern happen, then we should hold our investment. So the moment we get to know that this is breaking the support on a chart level, we are going to say that, okay, we're not going to do 5 times, we're going to do 3 times and exit. So we have to lose money in this process. We can't be a long-term investor just because we have invested our money. If our analysis is wrong, and out of 30 stock, I think we would be wrong in 10 or 12 places. And the plan is that to save our base capital, not to repeat something if we see it's going bad, or at least to hold ourselves. I mean, maybe I will invest here, 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 and I will not do the rest two part, and I will wait. Let it fall down if we are not able to exit somehow, but we'll not put more capital to it. Okay, and if it is federal, and the same thing can happen there also, right? Like you put here, okay, here one, two, three, and then it's falling down. Now at this point we would say, I have no courage to put extra money, but I will leave it. So the three investment has gone for the stock, and we'll leave it. And when the stock itself has shown the strength and has gone up, that moment we're going to re-put our money at whatever the value we decide. So this is an this so all this process are something which we are still exploring, right? There's no defined rule how it's going to work, but I feel that in any beer run, this kind of charts usually falls. Now there can be two kind of beer phase that I am expecting this moment, okay, for next 1 to 3 years. One, when the price is stuck at a height, it doesn't really get how to say fall, like Kotek. This is a weekly chart. See, even though Corona period was pretty good for most of the company, but banks were struggling, huh? And if you see here, Kotak was doing nothing, right? I mean, it just stuck at a point, and but it has still corrected. So coming to the example that I have given in the starting of the meeting to Naveen, that Naveen opened a restaurant, and he is doing a business of 1 lakh rupee per month, and he's doing it for 2 years. And after 2 years, he save a lot of money. He makes some changes in his cuisines. He also get new customer. He opened a new restaurant chain, and then the stocks. And then Naveen had started earning 2 months a month, 2 lakhs a month, and it also happened again for few months, few years. And after 2 years, he then invested his money back into his business, and then he make 5 lakh a month. So every chart also do the same, because it's this interpretation of what we are doing. So in this case also, Kotak Bank was actually doing not bad, huh? If you see here, um, yeah, I mean, if you see the daily chart, you feel like it is doing nothing. But if you open the EPS, oh yeah, see the EPS. I mean, this is unbelievable, right? Just think, a company even after corona time was keep doing good. I mean, 50 EPS become 110, which mean that the earning per share has doubled, but the stock price almost have shown no change. And the same for the return of investment, or maybe the similar, right? I mean, at least it has not gone down. Whatever the percentage wise, you can say the ROE, which was about 12, the ROE has become 17. So even the ROE has more than 20-25% change, but the price has no change. So this is also one kind of correction where the price is stuck at a moment and it doesn't really goes down. And that happened to most of the company where the investor sees there's a potential. So those stock doesn't really goes down. Those stocks is stuck at a point, but that is still a correction. So this is one type of correction, huh? Other type of correction is what we have seen for Federal Bank. These are the two kind of correction I'm expecting. Um, there can be third, which is not even correcting. It's keep going up. Um, I would like to take an example, but before that, I wanted to know: do you have any questions?
No.
No? You think what we're discussing making sense?
Yeah. I had one question in the
Oh,
beginning, but I forgot that question. Maybe
okay.
later
I
I
mean,
will ask.
yeah. I think if you have any question, you can also paste in the chat, or you can also take a
Okay,
note, which you
better.
can take it. Okay,
Yeah, yeah.
that's great. Okay. Um, okay, fine. Let's continue. So I will come back to the allocation part. So we are saying that we are going to evaluate a particular stock during the phase of 1 to 3 year, and even if we are unable to put more than 3 times in the whole process, we are fine, huh? So we are not saying that the whole 1 lakh has to get deployed in 30 stock. Even if you say that in 30 stock you have been able to deploy 70,000 and 30,000 is you're sitting on the cash, it's fine. It's good even that you have extra money and you are waiting for more opportunities. So that's a good thing. But what are we expecting? We are expecting that when market recovers, our stock, at least if I have an luxury to expect, then I would say I expect my large cap to at least get doubled. Yeah, what's bad to say, right? And we want 3x in mid cap, and I expect 5x here. And we all know that happened, huh? I mean, that always happened. I would like to take some example. So since we have Naveen in the meeting, we'll take Naveen Florin. Now, uh, Naveen Florin is a okay company, and in Corona time, it got a boost because also because of uh, the kind of business it is in, the chemical business, and second also because it is part of China One Plus strategy. So there are a lot many companies which actually come out of it, and there was a demand, and this kind of company was able to fulfill it. And you can also see here that there has been a consolidation of amount on a weekly chart for a longer period, right? So it has stuck for a moment, and soon after the corona happened, this company has gone up. Well, this is not part of my analysis today, but I just wanted to show you here that when a stock started running from like 900, it reaches to about 5,000. Now it's again correcting, okay? But 5x expectation is not a bad thing, and it is possible. Okay, it is also a good and big company, it's not a small company. And even if you see the EPS was actually telling you that in time. So if we were smart enough, we would have come to this and we could have some filters. I mean, there can be some alert mechanism by which you can say, show me all the list of company whose EPS has increased marginally, like EPS increased by 40% in 1 quarter or 30% in past 1 year. So there's a possibility that you will be able to find a stock like this, but we didn't. Yeah, that's why I'm saying that there's a possibility that if we start now, and if fundamentally if we think that this kind of companies is on our radar, then when we see a change on the fundamentals and technical, then maybe we can make money. Okay, So this is an example where we can expect good amount of money. And when to exit is something I have my opinion, but I would not like to discuss that today because that will take too much time. And exit itself is a big personal decision, right? Like somebody might like to do exit completely. Somebody would say, let me take me out my base investment, let the profit rise. Somebody would like to invest more because they think there's more possibility. Somebody think let it be, it's only 1000 rupees. Who cares? So I mean, 1050% down is 500 rupees down. So maybe we don't care. Or maybe if it is 10 lakh rupee invested, 10% itself you will care more. So how an exit is planned is something not for today, at least for me. Okay. But I would like to discuss more about how the allocation will be made and what is the plan that I think is important. Okay. Now, okay, but you are here with me, right? No question, right, on this?
Yeah, only question is related to small caps. Small caps, as we say, it's risky, right? So allocating 12 stocks in the small cap and micro cap
Hmm.
is
Yeah,
taking more risk, right? There.
yeah. I think, yeah. See, there are a
Let's
lot.
make 10, 10, 10 list.
Yeah, there are a lot many ways to explain now, like why we are choosing this approach. As I said, if you are an investor who don't want to take a risk, then you can make this distribution from 30, 30, 40 to 40, 40, 20, or even in a diverse manner. Um, since we have a luxury from today, like when I say 1 to 3 year, you have time to figure it out what will be the good opportunity that will come. This is something which is possible. 40%, okay, because you have time to do a research and choose yourself, or even to make a mistake but come out of that mistake and get into a place where it is not so bad. And we'll discuss about those stocks, huh? But if you don't have a kind of a allocation where you are more aggressive and not very defensive, then you cannot even make a money. So even after doing all the thing for 1 to 3 year, if you have invested 1 lakh rupee, and after that when the bull run ends, and if you have make 1,75,000, will you really justify that your choice was ever good? So if you ask me, I would like to do research since I have time, but in the same moment, I would like to take a liberty to put myself on a riskier position. And this is not risky if you ask me, because normally when the stock market goes opposite, when small cap falls, then large cap fall less, or even sometime large cap goes up, huh? There's also a possibility. So your portfolio as allocated in general will be managed, but the opportunity when it comes, when there's an opportunity of 2x, 3x, 5x, large caps are not so easy to get doubled, because there's an limitation in the market. I'll give you an example, huh? HDFC is few lakh crore total size wise, right? So if HDFC stock has to double, HDFC has to do that much business again. So how much is HDFC? Let's open HDFC Bank. So HDFC is 12 lakh crore. Now, whichever the price of HDFC today is, if it has to get doubled, so even for you 1 lakh to become 2 lakh, poor HDFC has to make 14 lakh crore in the world. It is not easy because there are not that many customer outside of HDFC. You know, if there's a market allocation, if you have to make it, you will be able to know that there might be a banking market cap of 20 lakh crore in India, and out of which 12 lakh, 13 lakh is with HDFC itself because it's the largest bank. So the chances to make HDFC itself 24 lakh crore is almost impossible without a major change in the whole plan. But if you talk about a small bank like HDFC First, just an example, it is 46,000 crore. Now the stock price is somewhere 63. The stock price to get double, the market cap has to double to 1 lakh crore. Do you think it's possible? We still don't know. But if you see the market possibility, if the same statement saying 20 lakh crore is there in the market, So from 20 lakh crore, a customer base and total amount of 50,000 crore to shift to IDFC First Bank is possible. So I would like to stick to a good fundamental company, which is still a large cap. 46,000 crore is not a small cap, still a large cap. But there's an opportunity for this bank that it can go up, right? So, and the same thing is also when we talk about the other large cap. So most of the large cap that we are talking about usually take 60% of the market share of the particular industry. So for them to grow is difficult. But any stock which is not having that much allocated in the industry, they have more chances. Or itself the industry grows, like chemical industry, it grows in past 3 year, or defense, it grows in past 5 year. So if there's a change in the whole industry, there is a fundamental change happening, then might be, I mean, Reliance was a good investment in 2016 2017 because Geo has been introduced, right? So Reliance has actually become double, more than double in the same period, even after the stock split. So there is a possibility that you find those things, but if you have to make a decision, I think I will stick with this number. Okay. And there may be a moment in time when we will come to a number which is more practical in nature, I mean, there might be 25, 25, 50. I mean, we never know. Yeah. So that change is something which we will going to know over time. But to start with, I think this allocation makes more sense. Okay. Now, 5 times I said, even there should be a question, right? How you want to invest? Would you say 20% each time? So this is one approach. So most of the people who invest their money say that we would like to do 20% on each time. So let's come back to our federal example. So yeah, so in federal bank, if you were lucky enough last time, then you would have put your money here, 1, 2, 3, 4, 5, and you would have made the money out of it. But there's a possibility that you cannot make that. Even before that, the stock started going up, right? So in that case, you may say, shall I make it 50% in the first hand and then I will say 10, 10, 10, 10? That might also be another possibility, right? Or we split in such a way that we invest more in the starting, and soon after it goes up, we keep adding it up to a number, and after a certain moment we'll take out the money and let it ride. So all these things are possibilities of how you're going to invest, and this is something which require time to analyze. So if you ask me how I'm thinking about, I'm not going to make it linear. I'm going to go with an algorithm of 50%. I'll tell you why. When the first lot of 50% will go to one stock, first of all, when we are entering, we might have seen something, right? We just don't enter. When we are entering in a bear market, we know that there's something happening and it can become more worse. For example, here, I would have entered here and it goes down. So there's a possibility that I would be saying, why I entered here, I could have entered here. But if I'm saying that I have entered my amount, and if I'm wrong, then I will exit myself based on certain calculation at this amount itself. I will not invest more amount and then I will exit. So putting 50% at a amount, what whichever phase you are, doesn't matter. Putting an amount which is good enough also get your attention, because when you put a good amount of money, you also give right attentions. Plus, if there's a chance that you go wrong, like it didn't really goes down, right? It recovered from here. So there's a possibility that you say, oh, if it crosses a certain number, then I would have closed my position and had looked for something else. But in this case, it has recovered. So it is more like a risk reward thing, so that your first investment itself is very strong, right? Like if you are playing a cricket match, right, and you have 1 over to bat, then I would say you have to make 10 runs. So what you will do, I mean, would you like to say first ball for a six, and then you will say let the 5 balls I will make a run based on my convenience, or you would like to wait till the end and you would like to hit the six in the end like Dhoni? If you ask me, I have no wicket to worry about, so I will go with six on the first ball itself and not wait till the last ball. you know. So this is one of the approach, and maybe I will change, or maybe we can discuss and we can make ourselves more educated on this topic. But I feel that it is better to get aggressive because we find something, and there's a possibility that what you have find is right, and with time the possibility will increase. So you will not get the time to invest again, not 5 times. You may get 2 times, 3 times, like ICTC. And these are not example which I thought of. See this one. Okay. Um, IRCTC was an okay company. It got listed also at a premium price and it goes up. Now, people who thought like we will going to accumulate it when it falls down, it didn't really have fall down so much. Huh? It fall once, but then it started going up and it accumulated at a medium level and then it goes up again. So people like me with that logic, 20% here, would be sitting here and keep waiting, right? So if we know that this fundamental is good for a company, even if I put 50% here and I do not get an opportunity thereafter, I will not be in guilt. You know, I will feel that okay, the stock didn't give me opportunity because it's not what how I predicted it will go, but still I have put a decent amount of it. Let me ride. And whenever there's an opportunity again, I will get in again. Maybe I would have entered again here, but it's still fine. So we are believing the company is fundamentally good, and second, we are believing that we have put a good capital, and that's the whole point we're discussing, right? Like in this really the bigger thing that we have missed is the allocation part. We have not put enough money on enough stock at the right time. So it is better to book loss if you are wrong, but not to really put less money. Okay, any question? Jairaj, any question?
No,
Why you are selling 30 stocks?
Yeah,
Like think
uh,
that many saw.
yeah, no, no, actually that's a good question. Why only 30? So we were discussing last week that we can go with a really small number like 10 or 5 or 15, or we can go with a standard number like Nifty 50 itself. But why 30 is because we don't want to make it overstretched, first of all. Second, when we say 30, and if we are able to put our investment like 3% on each stock, then first of all, there's a chance that if the stock will increase like double, then your 3% capital allocated will become 6%. Or if it become 5x, then the 3% can become 15%. In the same time, if we make 50% loss on one stock and we believe it's bad and we are getting out of it, then you are losing 1.5 or 1% out of it, right? And that is complete if you're able to put your 100% of one of the this number I'm talking about. If you're able to put 100%, then only that 3% will come. So there may be a moment when you say you started investing the first three allocation and thereafter you think it is a bad investment and you come out of it. So the chances of loss for each stock is about 1% or even less than that at some moment. So for an investment where we're expecting good return, and we also want to say that the value should so in the portfolio to make a difference, not just because it become double and doesn't make any change in the portfolio. We need a number which is not too high and not too low. Not too low is also important. For example, I have 15 stock or 10 stock, huh? And I do believe HDFC is great, ICICI is great, Kotak is great, and out of my 10 stock I have only these three stocks which didn't really run in this bull run, the last bull run after corona. So my portfolio is hanged because I have only 10 stocks, and only and out of 10, 3 are part of one industry which has not performed at all. So we need to find a balance in between where we say that even though one industry is not performing even in the next bull run, we still have other stocks which can go up. And that's why or me or Naveen were discussing last week that we have to come up with a number, and we just come up with this number 30. And maybe there's a possibility that in real implementation we would be stuck with 10 itself, or we may go to 50. Yeah, but 30 is an ideal number which I would like to stick even in future, because then only we'll be able to concentrate. So there may be a possibility in future that we really find an stock and we don't have budget for it, in that moment we will going to sell an stock out of 30, and we're going to take that one into our portfolio. This is important. At the moment, since we are not allocating our money properly, we are keep adding the things, just because we think it is important. But that is also destroying our potential for an stock to go up. Okay, and this is a hidden trial approach. I believe that we are going to make the first 30 as a real bad company list, and then we're going to make it saturated. So even though if you have 10 lakh to invest, maybe it's good to start with 1 lakh. Just an example, huh? Number is subjective, but this is an experiment which will going to help us at least define ourselves allocated properly, that I have this much money, I'm going to put this much money into this much company. None of my company will going to make more than 3% of my portfolio. Does that answer your question, Jaraj?
Yes, sir. But for me, no, I mean, what my thoughts are, actual 20 companies, if you have, that is more than enough. And when you are taking a share, you have to analyze beforehand that this company is good. Now, if you have that commitment, you have to go 100% into that. And when it corrects, then add on that. In the 20, whatever 20 shares I have, what I follow is thing is corrected, and there is nothing fundamentally wrong. I will average it, or I will still invest. I don't call it as averaging. I will tell it as I am getting better value with that company. So that is how I buy shares.
Mm-hmm. Yeah.
Before
Maybe
share, I have to do analysis, and once I know that okay, this company will make money and the management is good, then I will start investing slowly. I mean, initially I will take some 10,000 rupees, then I'll watch for some time. Suppose if it has corrected, then again I'll add. Uh, so, over the whatever shares I have, I'll add, and I'll do consistently like that. So I keep a like number as 20, because what I observed is if you have too many companies, you will feel that always some companies are not performing, and you'll sell it. Then after some time that goes up. That is what my observation is in the stock market.
Okay, Naveen, you were saying something.
yeah, you were absolutely right, Jairaj. So, same question I asked last week. Prem, you mentioned, right? There is a one video which you shared how to make 10 lakhs to 100 crores or 200 crores.
Yeah.
That's what, that's the concept we are talking about here, right? If I understood correctly in the last week,
Yeah.
you mentioned, right? We are not, these 30 stocks, we are not sticking to the long term. It is, we are seeing the upside potential. Whenever the market is going down, we are planning to make I mean, purchase at the lower, and we are anticipating this doubled 3x or 2x, 3x or 5x out of all the three segments, right? That's what we are aiming for. It's
You-
not the long term on these
exactly.
30 stocks.
Okay, exactly. So let me come back to this topic. Um,
Yeah.
we were discussing about the concept of 20% or 25% in an year. And that story that we were talking about was also something which says that if you make 27% every year, then in 3 years you make it double. And you started with 10 lakh, then in 30 year you would make 100 crore. That's a high number thing, but still the fact is that anywhere when the CAGR of your portfolio, if it is between 20 to 27, let's take 25%, then there's a huge chance that you are going to double your money in 3 years. For the purpose of investment that we are planning, there are multiple ways. There can be pyramiding, which Jaira just said, where we invested based on our initial impression of an investment. Then we get into the details of the fundamentals. We follow up the conference calls. We check it other things in the market, and then we invest when we find more opportunities. And we keep pyramiding it up until we really feel either we are done or either we feel it is no longer a company where my efforts are useful. So that is one approach. Yeah, that is, I think most of us are doing something similar. um, and we are doing the approach not because we have 20 stock. We are doing it because that's the way our habit is. We feel that we will put our money slowly into something. So if there's an opportunity comes in between, when something like Naveen Florin phase comes, right? If I open it again, okay. So if there's a phase comes where we are investing, but we are not talking about the allocation of money, we would say that, okay, every company in my portfolio is increasing by 5-10% an year, but this company has doubled. What should I do? Then I will say, okay, let it be there. There might be something, and I'm not there to take extra risk. Let it go up. And because I have not been into a mindset of multi-bagger identification, something which has become 1,000 to 2,000, it will become 4,000 or 5,000, and we will still be making some amount, not good amount. Okay, so 5%, so 20 stock means 5% per stock. So 5% will become 25% of your portfolio when your stock will become 1,000, 5,000. But there was a possibility in between when we could have made more. Okay, or maybe I would not have invested 5% even. I might have invested in a split, one stock 2%, one stock 10%. There's a possibility, right? And since this company was not so big or so famous, I might have invested only 1%. So my 1% would have become 5% in the end. So I think the point is not here like how many companies is needed. Maybe 30 that we come with this number last meeting. But it is also important that we are just starting. So maybe with time, we can come up with a number which is more practical, more manageable, more profitable. But in the same time, we also need to work on the allocation part. So whichever number we comes to, right, 10, 15, 30, 20, we need to follow and need to make an algorithm on top of it. Like if it makes 10%, what should I do? How and when I'm going to invest? What is my proportion of money split? Am I going to sell it if I am going to get double of it? If I'm going to sell, if I'm going to make 50% loss on it? So these are few of the things which I'm trying to identify for the next bull run, because I have a feeling that this is the most important thing. I have identified, last week also we discussed this. I have identified Motilal Oswal finance in this bull run pretty nicely, huh? I mean, I found it in when it was in 200, and now it is around 1,000. I find it in the right moment. I would say that I was really happy that I was able to make good investment around this. But I don't have any template or structural way of investment that moment. I do not know if I have 1 lakh rupee, how much should I put in Motilal? I was keep putting, and then I was thinking how much more I should put, or I was thinking what is the minimum I should put. So I was just making rule by my own. I was changing the rule every day based on my gut feel or based on whatever money I have in my account. But the point here is that whenever the bear period of a particular stock will be over and we are saying that we are going to invest money into it, whichever way we wanted to do it, thereafter, the moment it goes up, I want to make maximum benefit out of it. And believe me, that's the thing that makes a difference. Huh? That's the thing which will going to make you a normal investor to a smart investor. Because as I said, we all have stocks in our portfolio. which become 5x or maybe 10x. But do that 10x really make a difference in your portfolio size? Like, because I know one guy who has Bajaj Finance from 2011. Okay, and we all know Bajaj Finance is a multi-bagger, right? And that and that guy has I think invested somewhere at 60. Okay, and from 60, I think this has been a journey to remember, right? But the money he has invested was like 2000 or 4000. And every time when I met him, he was just telling me that I only invested 2000 and now it is so high. There was no structural allocated algorithm on his investment approach. And that's where I'm thinking, like, we have to come up with this. And at the moment, what I told you is in my mind. And I think we have to peel off this thing layer by layer. Okay. Because I have a feeling that maybe we are doing something which is better than this. We can do something better than this. But still, I wanted to explore these things one by one. And I'm happy that we are discussing this 30 because maybe we can shrink this number, and we can come back to this number later. Okay. This is just an suggestion to start with. Maybe we can really can minimize this number. Okay. Okay. We're going to have the call sorted today. So I have few more things I would like to go with. Um, okay. Last week we were talking about some things like we'll discuss some of the stock which might have potential to go up, right? So I have good amount of list, but I will going to make a small list discussion today. And this is only for learning purpose. Huh? There's no fundamentally or technical advice on top of it. If you want to invest, please invest as per your own risk. But if you make money, you can send me a coffee. Sterling tools. Now, I can go deep into it, why this stock, but I would still like you to go and check about this stock. Okay. This is a small company, hardly 1-2,000 crore. Okay. But this company has completed its bear phase. Okay. And this company has started giving good EPS from past few time. Okay. So this is already a company which is doing good fundamentally. How we know? As we discussed, the EPS is increasing and the ROE is increasing. There can be more. You can think about it. But for fundamental 1 second analysis wise, I can say this is good enough. Yeah. Also PE. If you are interested to talk about PE, the the earning has increased much better than the price has appreciated. That's why the PE has not increased, which means that even if the price will get double from here, so if the PE become 30 to 60, the price has to double. Okay. So even if price become double, the EPS will not be high. So if you see in 2020, the EPS was about 56. So there's a possibility that even this company get double from this point, and still the company will not considered as overpriced. Do I make sense? Is the company is in a bear phase? Maybe everything is correcting at the moment. This is also correcting, but still it is showing strength. How I know it? On a daily chart, on a 200 EMA, if a chart is above 200 and with the fundamental support, I still believe as of today it is strong. Okay, it can fall down tomorrow. It's not a matter of prediction. It's a matter of, is it today? It is strong. It is strong. The chart says it is strong. So I'm more interested to discuss about these kind of opportunities where the bad time has recently passed. Yeah, the earning has started showing on the chart and on the fundamentals, and if there's an opportunity because it's a small company, so if the company grows it can take its competitors portion of investment and it can still grow, right? So I'm more interested in this kind of company, and this is one of the example. So maybe that's one can be one of the homework that you can learn the fundamental about it. I did some study, but that is not part of this call agenda. Yeah, because I have to close this call in 5 minutes. So I have few more example. But do you have any question on this before I go to next talk? Jairaj, do you think this chart is good?
Actually, I usually won't see the chart. I see
Oh,
the business. So
nice.
chart, no, I don't actually see much.
Great. No, no,
My
that's good,
criteria
huh?
is
Because we want multiple variant of opinion. So this company is 2000 crore with an ROE and ROCE of more than 10, 12. The PE is 30, as I said. The EPS is good. This company has not pledged. Okay. Um, this company, the first one, um, quarterly growth is 35%. The sales growth is 25%. The debt to equity is 0.28, which is okay. It has free cash, which for a small company is good. The promoter holding is okay, and the public holding is not so bad. If you see the quarterly result, it is keep growing. It is not decreasing, at least. Yeah, at the moment where we are discussing, the result is really good. It's not bad. The profit wise, this company is doing okay. If you see, the sales has increased. It actually has doubled from last few years. The balance sheet is strong. It has the cash flow positive. And as I said, um, okay, if you want to talk about ratio, we can. But the pattern for the shareholding is also pretty decent. It's a very small company, so we don't have a lot of DI or FI into it. But still, if I click on public, it says that it looked like there's some strong player around, huh, who are part of this game. So it's a worth investigating company, because the market cap is something which can go up. And of course, we can go more on the fundamental story. There are many ways to go inside, and how to investigate, how to get into the mode of investigating. We will cover it later. But fundamentally, also, when I checked, I find it okay. It's not a bad thing. Yeah. Business wise, we can discuss more. It will take more time. Yeah. But yeah, good to know that you are a fundamental guy. I can learn a lot then. There's another company called Pokarna Limited. This company is just going up. It doesn't really believe the beer market thesis. Huh? It doesn't believe us. It is going up. It is on the top even today. Why I'm talking about this? Because this company has shown a continuous growth from past few years. It is keep increasing. And this chart is pretty interesting because even there has been a volume increase. And if you see, after Corona, it goes up and it already has corrected. So whatever the correction we're talking about, the bad phase, it has completed and it goes up. So normally in chart, when you see and say that the company has already corrected and now it's going up, whenever a bear start, these company fall less. I will repeat, huh? Whenever you see a company which has gone up in the bull run and it has already corrected and now it's already started its upward journey, whenever the beer starts, all the companies started falling. These company fall less because first, fundamentally, it has the support at the moment. Second, these companies are already corrected, so there's a less chance of correction. There's a strength behind it which is taking it up. So we are not going to buy today. But if this kind of company, if we can do more research, then this may be one of the potential company which can get into your top 20 or top 30. So to find something which is strong, if you have to bid on a horse which can win, then you can of course choose a horse which is already stronger, right, than others. So this is stronger already than the other. And I believe that this is a good mindset to start with, that we are looking for a stock which is already good, already corrected, and is already showing the growth. Okay, so two different perspectives on the first and the second, and third is this. Now, this chart is it's in how to say correction or bear phase from past, and it is still doing the same. Yeah, this chart has shown that the earning has not increased, but this is the same example which I given for Naveen. So Naveen already has earning 2 lakh rupee per month, per year, sorry, per month, and he is doing it from past 2 years. So there's a possibility that Naveen now actually has made and saved a lot of money if he has not done fundamentally something wrong. So there's a possibility that this will go up, and something which is already corrected and maintained at a price, there's a possibility that this will not fall down so much. So in the next bear run, if I have to buy this, I will get it at a much attractive price. And since because maybe this chart has a potential to go up, and if I get it at more discount, then I increase my chances to make it multi-bagger. You know what I just said? I will repeat. See, there's a moment when this chart was at 178. If I would have put my money here, all my investment of my whatever I thought about here, and then the price has corrected till 50, 70, 60 rupees, it is not a wise decision because this has gone till 750. So 170 to 750 is still 4 or 5 times. But if I would have invested in 60, 70, and if it had become 70, 750, then it has given me 10 times. So entry is more important because when you entered, make the chances to make your investment multi-bagger. Even though this was not bad moment, but if you have invested most of your money, or if you have invested in time, then you might have a better average at your entry time, and then you could have make more money. Same ways now, I'm not going to put, anyway, it's not an investment advice, but if I have to put money, I will not put 50% now. Since I know there's a bear market coming, or it's come already, it will correct more, and then we'll start making position in this kind of chart. But it always come with an if. Do I believe that in the next bull run this will be part of the bull cycle? Yeah, we don't know. Why we don't know? Because there are not many companies which looks good but are not part of a bull run, like Web Global. I don't know if you know about this company or not, but this company has been a story of lot many people who are not able to make money in the last bull run. It didn't really perform well. So there was a moment when it was going up. Fundamentally, this company was doing great, that moment. But then fundamentally, if you see the EPS and ROE both stopped growing, and it started decreasing. And the same has happened. So anybody like me who has put 3% of a portfolio from past 5 years would be making loss and would be sitting and keep averaging myself. And I still do not know if this company grows in next bull run. So I should not enter here. But if you ask me, should I enter today? Maybe, because there's a limit at which you can say what's your risk is, right? So at the moment, the risk is low. And if we do an analysis and we find that this company has a potential to grow, that moment, this is an attractive price. Okay. So
Small question.
Yes,
Okay,
Naveen.
you don't have the time.
No,
So there is
yeah,
earning price,
yeah. Go
that
ahead.
yellow color thing, right? EPS, right?
Yes,
If you
yeah,
see, that is increased somewhere, but slowly. Okay, so again, stock price also got decreased, right?
yeah.
With that.
See,
Okay.
as I said in the starting, um, price will not follow earning, but it will go beforehand. So if there's a chance that earning will fall down, before that itself price will start falling down. So this is just an indicator, but it also help us when we are looking for multiple touch point, right? Like what we should do. So okay, I think I am done for this call. Um, if you think you have any questions, please note it down. But I think we will come back to this maybe next week. Yeah,
Yeah,
cool,
sure. Yeah,
helpful.
it's a great. Yes, of course.
Thank you, Prem. It was uh, uh, definitely I'll observe these two companies. And,
Okay. Okay. We'll connect again next week then. Thank you. Bye bye.
okay.
Yeah,
Good night.
thank you.